to another Tech Story by Techarc. Today, we're taking a look into the crystal ball, all the way to 2026, to understand a massive challenge that's brewing for India's smartphone market. Now, this isn't just your average forecast. The data is pointing towards a perfect storm on the horizon. In fact, Techarc is calling it a Bermuda Triangle situation, one that could make market growth, well, just vanish.
So what on earth is this Bermuda Triangle? No, it's not about lost ships or planes, but it is about a powerful combination of forces that is threatening to swallow market growth whole. Let's dive right in and unpack this perfect storm piece by piece.
Here's our game plan for today. First, we'll define exactly what this Bermuda Triangle is. Then, we'll explore its three corners: some serious supply chain chaos, a drop in new subscribers, and a slowdown in innovation. After that, we'll look at the 2026 market forecast and see how the Make in India initiative plans to steer us through these choppy waters.
Right, we're calling this a perfect storm for a reason. See, it isn't just one single problem. It's a combination of different pressures that are hitting the market from all sides. It affects both the ability to actually build the phones and, crucially, the desire of people like you and me to go out and buy them. It's a classic squeeze on both supply and demand.
And here are the three big forces making up this storm. Number one, an unpredictable supply chain that's making key parts expensive and hard to get. Number two, the massive wave of new smartphone users in India is slowing down to a trickle. And number three, a lack of real, game-changing innovation means we're all holding on to our phones for much longer. So let's start with that first one, the supply chain.
So the first side of our triangle is this supply chain chaos. And this is where you can really see how global pressures are creating very real, very local problems for making smartphones in India. The two big culprits here: memory prices and the value of the rupee. Now, here's where it gets fascinating. It's the AI connection. The global boom in artificial intelligence has created this massive, hungry demand for something called high bandwidth memory, or HBM. And guess what? This is the same memory that makes up about 8 to 12% of a modern smartphone's total cost. With all the big AI companies buying it up, prices are just going through the roof for everyone else. And the numbers? Well, they're pretty staggering. We're looking at an approximate 50% jump in memory prices by the end of 2025, and that trend is expected to continue right through 2026. This isn't just a small price bump, it's a huge cost pressure that brands will either have to swallow, which hurts their business, or pass on to you, the customer.
And if a global price hike wasn't bad enough, there's a second punch. And this one hits India particularly hard: the devaluing rupee. You see, most of these key components are paid for in US dollars. So when the rupee gets weaker, everything automatically gets more expensive. It's a real double whammy for manufacturers.
To put that into perspective, in early 2026, $1 was projected to cost over 91 rupees. Just think about this. 2 decades ago, it was around 44 rupees. This steady devaluation puts a constant, grinding financial pressure on the entire electronics manufacturing ecosystem in India.
Okay, let's move to the second side of the triangle. We're shifting gears now from supply problems to the demand side of things. And here, we're seeing the main growth engine for the market, new subscribers, really start to sputter.
This chart just says it all, doesn't it? Back during the 4G wave between 2016 and 2018, India was adding new subscribers at a rate of 4% a year. But fast forward to the 5G era, and that growth has dropped to just 1% per year. The gold rush of new users is clearly coming to an end.
So here's the crucial gap. The industry has been aiming to sell about 150 million phones a year. To do that, they need about 30 million of those to go to first-time buyers. But at the current rate, we're only seeing about 10 million new customers coming in. That creates a 20 million unit shortfall right out of the gate.
And this brings us to the final corner of our Bermuda Triangle, the innovation slowdown. You see, if you can't get enough new users, you have to rely on existing users upgrading their phones. But without a compelling wow factor, people are just not feeling the need. They're holding on to their devices for longer and longer.
This quote from the Techarc report just nails it. For the average person, there's no real business case to spend 20, 30, 50,000 rupees on a new phone. The yearly improvements are small, not revolutionary. So unless their current device completely dies on them, they're just staying put.
And this data really drives the point home. A whopping 75% of users are perfectly satisfied with the smartphone they already have. Only a tiny 7% are actually unhappy with their phone, making them the only real immediate targets for an upgrade. Think about that. When 3/4 of your customers are happy, selling them something new is a very, very tough job.
So with this Bermuda triangle of pressures, the supply chain chaos, the slowing user growth, and the lack of must-have innovation, what does the market actually look like for 2026? Let's get into the numbers.
And here's the key number to remember. After factoring in all these challenges, Techarc forecasts that new smartphone sales in India will likely stall at around 130 million units in 2026. That's that 20 million unit miss from the industry's big target, signaling a new, much tougher reality for the market.
Now, looking at this slide is really telling because it shows how brands are already reacting. In 2025, the focus was squarely on the mid-range and premium segments. They made up over 60% of all new models. But what's really critical is that not a single new phone was launched in the entry-level segment, under 6,000 rupees. That leaves a huge potential gap for first-time buyers.
So, with the market facing these serious headwinds, what's the long-term play? How does India navigate out of this situation? Well, the answer seems to lie in the next phase of the Make in India initiative, which has suddenly become more critical than ever before.
And let's be absolutely clear, the first decade of Make in India for smartphones was a massive success. Imports of fully built phones dropped from a peak of $7.6 billion all the way down to just $442 million. That huge mountain of imports was, for all practical purposes, completely leveled.
But, and this is a very big but, while we stopped importing finished phones, our dependence on imported components, the processors, the memory, the displays, the very things getting hit by supply chain chaos, has grown exponentially. The fight has shifted from just assembling phones here to actually making the high-value parts that go inside them.
So this is the really crucial point. We are now entering phase 2 of this journey. The decade from 2025 to 2034 is all about building a local component ecosystem. It's about increasing what we call domestic value addition, or in simple terms, making more of the valuable parts of the phone right here in India. This is the only way to protect the market from global shocks, and it's a vital step towards becoming a true tech powerhouse by 2047.
And that leaves us with one final big question. As India charts its course towards its Viksit Bharat 2047 vision, will building a strong domestic component ecosystem be the strategic compass that allows it to navigate this immediate Bermuda Triangle and emerge stronger on the other side? It really seems like the answer to this short-term challenge lies in that long-term vision.